Welcome, I'm Catherine Magana here with Steve Wolf, Rachel Ivanovich, and Vince Stefano, where we're here to provide you some insights on the market, planning, and tax planning. So here we are. Today is January 16th. We actually took a couple weeks off. Last week it was the funeral for Jimmy Carter. But here we are this week, and there's been a lot of movement in the last 7 days. As of yesterday, January 15th, the Dow Jones was up about 1.5%, or year-to-date was up 1.59%. The S&P 500 a little over 1%. The Russell 2000, which is more small-cap stocks, 1.49%, and the Nasdaq about 1%. But that really happened because some of the news with inflation, it looks like core inflation came in at 0.2% in December, which was lower than expected. And so obviously that was some good news for the markets. I'm happy to see a big move in at least going up for the year, but we're still really early in the stock market or the equity markets and bond markets.
Yeah, I think we're just treading water at this point. You know, the market goes down, market goes up, but it really hasn't moved a whole lot in the last month or so. So, what do you think, Vince?
Well, we're in earnings season, so a lot of big companies, the industrials, the big tech companies.
I'm just going to ask you something because we talk about earnings season, and people say, "What does that mean? What do you mean we're in earnings season?"
It just means that all companies are going to start reporting their fourth quarter earnings, and they're going to give guidance for Q1 and on into the rest of the year. And, you're going to see industrials start coming out next week, the big tech companies the week after, and we've seen the financials this week, and they've all done quite well. But I think your comment about the market kind of being in a state, if you remember, back in 1956, 57, Elvis Presley came out with a song, All Shook Up. Mm-hmm. And the market...
I really don't remember that.
Let's hear that song.
All shook up. Uh-huh. Anyway, I think the current market right now is a little shook up. And it's shook up for a couple of reasons. Number one, there's a growth scare that the market's looking at. And we've said many times on this podcast that over the last 2 years plus, many stocks have traded up dramatically, and they're now trading at some of the higher ends of their valuation scale. And I think the market's looking at the overall economy, wondering if it's going to be able to support the valuations on some of these stocks. So that's number one. Number two, you touched on inflation, Catherine. Mm-hmm. The numbers were a little bit more benign, but they still came in at 2.9% year over year. That's higher than what the Fed wants. And the market doesn't like inflation. And we're seeing that there's sticky price inflation, groceries, rents, insurance, whole bunch of different categories. Prices have not come down. So that's number two. Number three, the market's looking at interest rates, and higher interest rates do not bode well for equities. Last year, in the latter part of the year, the Fed cut twice for 75 basis points or so. Everybody thought that rates were going to come down. Surprisingly, rates went up in the latter half, or in the last part of 24 and into 2025. So the big question now is what's going to happen with interest rates in the Fed? Will they cut more in 2025 or will they pause? And I think the market's trying to digest that as well. And finally, the big bugaboo out there is tariffs. Mm-hmm. I have had more people, clients, friends, family, even people I don't even know, have come up to me and said, what do you think is going to happen with tariffs? How is it going to affect the economy, the markets? What will happen? And I think the problem here is no one knows yet, but we will start seeing something in the first 3 or 4 months after the inauguration on Monday. And I think the market may begin to sense if there's some very pro-business proposals coming out of the new administration, that's going to be, very, very good for not only the overall economy, but the overall market. But I think until we start seeing that, there'll be some uncertainty. The market doesn't like uncertainty, and things are going to be all shook up. Uh-huh.
All right. Well, don't do your Elvis impressions anywhere near us, okay?
Well, it looks like the Fed, from what I'm reading, there'll be no change at the next Fed meeting, which is kind of expected. But we've seen a lot of movement in the 10-year bond and some of the longer-term bonds, and then also on the shorter end of the curve, some of those rates are, we're not looking at the 5.5 we saw a year ago. I'm just looking at the 1-year CDs are at 4.15, and 1-year treasuries are 4.26. So,
and what's the 10-year Treasury bill at?
10-year Treasury is at 4.65%. But like corporates, AAA right now is a little over 5%.
So the yield curve
Is not
is
inverted.
more normalized
Yep.
now than it was before, where we used to have an inverted yield curve for the last couple of years, where the short-term bonds were actually getting you more money than long-term bonds. That's an unusual setup. Again, we've talked about this many, many times about that. Generally means that we could be in for a recession. The recession that everyone said was going to happen has never happened. Now we're back to a
I was
normal.
like the 2-year recession we've been talking about.
Right, at least 2 years.
2 or more.
So who knows what's going to happen. But on a different note, I have to tell you that last week I went to the Consumer Electronics Show in Las Vegas. And it's interesting because what seemed to be the biggest thing there, at least in my opinion, was the driverless cars. It's coming, and it's coming soon. There were tons of different booths from the big companies that were exhibiting things that had to do with the cars themselves. So all the accoutrements that go in them or how they're going to be used. There's this one company that apparently has a public-private partnership. And one is with the city of Atlanta, and I forget 2 other places. And what they're doing is they've got what looks like a kind of a big square, rectangular, maybe van that you can put maybe 10, 12 people in. And they're going to take those people, just like you would in a bus or something, on roads that are dedicated to those driverless vehicles. Okay, now how they're going to get those roads, I'm not sure, but apparently the city of Atlanta, for instance, has already mapped that out for them. So that's coming. Many, many different developments that have to do with, I think actually what's going to happen is you're going to have this, when you have driverless cars, it's just going to be one big entertainment vehicle. Okay, because you won't have to do anything.
Party bus.
It's like watch movies.
Well, and a lot of them
Listen to
had the screens, and they had the Garmin stuff and the who knows what, the different things that you can use while you're sitting in your car not driving. So that was a big deal. So anyone who thinks that driverless cars aren't going to be here is wrong. And the other thing I've heard from people is that, well, I would never do that because what if they get in an accident? Well, they're already in place right now. Places like San Francisco and Phoenix are already using driverless cars. And the accident rate in those is much less than in human-driven cars. So, and I'm kind of looking forward to it because, a lot of people like to go out and drink, and then they drive. So it'll be pretty great when you'll be able to drink. And I don't say you should drink to excess, but you're a little bit tipsy and you shouldn't be driving. And now you've got this car that comes and picks you up and takes you wherever you want to go. So now the interesting thing, I don't know how that affects the car sharing companies, the Ubers, the Lyfts, that type of thing. I'm not sure how that will affect them. If they'll actually have those cars and what happens to the drivers, I don't know.
They're already starting to partner with driverless cars. I can tell you that one of those companies that you just mentioned is working with Amazon to do some driverless technology, and they're actually going to put their driverless car in Atlanta.
Yeah, apparently Atlanta
seems to like their driverless cars.
Right. Well, I wish we had them around here because I think a lot of the drivers are horrible. So especially in the Southern California area. But anyway, that was a big thing. The other thing that I saw a lot of was virtual reality. So those goggles that you put on your face and people look like they're roaming around, not
fighting ghosts.
Yes, fighting ghosts, exactly. That was kind of big too. So I think those are the 2 biggest things that I saw. There were a lot of individual. Here's a couple of them that actually I was surprised about. They were selling record players. The old.
Oh, really? The vintage
yes.
one? Wow.
Well.
For Elvis songs.
That's right. And they were all shook up. And I won't do my Elvis impression either. But yeah, and the company has been apparently doing this for like 87 years. And I said, who's buying these things? And what they told me was the youngest generation is buying things because it's physical music. For all they've heard is stuff that you stream. Well, this is something that they actually can see. Now, I'm betting that after they see all these records that get scratched because you bumped into them, they're probably going to say, nah, I don't want that anymore. But I saw that. I saw jukeboxes being sold. Some of
Okay, interesting.
I haven't heard of that in a
I
long
haven't
time.
heard the name jukebox in a while.
Exactly. That's my point. Is that it seems like the youngest generation who doesn't know how to type on a typewriter. That'd probably be the next thing. You know, that's what we should do, Vince. We should do the new WWM typewriter because that'll be a big hit.
There we go. That and a jukebox.
That's it.
Sounds like a party.
So it was kind of interesting going from one to the other. There was also a lot of drones. So that was the other thing too. A lot of drones, including some drones that might take over where helicopters used to go. So there was one drone that it could be manned. It was probably, I'm guessing here, 10 feet by 15 feet, maybe even a little bit bigger than that. And what they said was if somebody is, like, let's say, stuck in the mountains somewhere and they're trapped, that they can take this drone and go into there easier than a helicopter. So that was I guess that was the third biggest thing. Holograms were a little bit, we saw some holograms, which are kind of interesting. And I'm waiting for, do you remember the old table hockey games where you had the rods
the
and the
foosball
stuff?
kind of thing?
No, not foosball.
Baseball?
It was actually hockey.
Oh, okay.
And you had, they hit a puck and you had these guys that you controlled with a little metal rod in the back of it. And you could turn them so that you could hit the puck into the goal. Anyway, that was a big thing for me when I was in college. I'm waiting for now when we can have holograms, that you actually have real looking people like in your living room floor that are actually playing hockey. They're not playing hockey, but it looks like it is. That's another thing, Vince. We should do that too.
There we go.
So this last week, we did see in LA the wildfires, and I know they're still trying to contain that. So our heart does go out to those affected, and obviously we don't know what the impact's going to be going forward, not only for California but even outside of California with insurance and providers. And so I know prior to the fires, there were already a lot of homes throughout California that weren't getting insured or had to move insurance providers, and so. But I think the impact of this is going to be pretty dramatic, and the cost and everything, and kind of to rebuild, it's going to be a while. But I did want to acknowledge that happened this last week.
And from an investing standpoint, you've got to be worried about the insurance companies that insure property, especially in any area that has floods, that has fires, whatever, because I'm not sure if they're going to continue to insure those types of properties. So you're right, it's going to have far-reaching effects, and we hope that not only our clients but our friends and anyone who's listening out there is safe. It's pretty bad.
And anyone who lives in LA County or has a tax advisor in LA County has until October 15th of 2025 to file and pay their taxes.
That was nice.
I had to bring up taxes.
Yes.
Sorry,
there we
guys.
go.
As opposed to
April 15th.
okay.
Yeah, and any deadline that falls between, I don't know exactly when they announced it, was maybe sometime this week. Any deadline for instance, payroll tax deposits and so on and so forth, you have extended deadlines to file and pay.
So I don't know if you know this or not, but what happens if your house was destroyed? Is that, again, we're concerned about people, but we're talking about taxes now.
You're talking about disaster losses. There are provisions for that. So definitely consult with your tax advisor because everybody's situation is completely different.
Why won't they just give the keys back to the bank and say, here are the keys, take it. I'm moving to South Carolina. I don't know.
Well,
I'm sure there's some equity too.
You've got equity in there. And if
equity in the land, maybe?
Well, if the insurance company is going to build back the house, you've still got the house.
That's true, if they build it back.
Right. So
And
we'll
at
see.
what cost?
This was a very expensive. They always talk about how the fires get more and more expensive. Well, one of the reasons is that the properties are more expensive, and where this particular one hit, it was the most expensive in the LA area, pretty much the most expensive. So the damage that was done was just astronomical, and you're right. Our hearts do go out to those people. We hope they're all safe.
So one of the things that just came out for 2026, which I know is a year from now, but it looks like the Social Security came out with the cost of living adjustment. Now, they're not going to do their final numbers until October, but their estimated right now is 2.1% for 2026. In 2025, the COLA, the cost of living adjustment, is set at 2.5%. So just kind of as you're planning and everything's costing a little bit more, I mean, those are just some things that are on the horizon, and we'll finalize, obviously, fourth quarter of this year for next year.
So you're getting about a 2.5% raise?
For 2025, it's 2.5%, and then it looks like projecting estimates for 2026, it's going to go down to 2.1.
course, if all the people out there give your money to WWM Financial, hopefully we can do better than that 2.5%.
There you go.
So speaking of estimates, yesterday was the fourth quarter estimate deadline, January 15th. So if you didn't make your payment, your last payment of the year for 2024, you still have time to do that. Just go online and make that payment to either the IRS or whatever state you live in.
Will you be fined at all or what? Probably not.
Probably not. I tell clients, if you missed it, just make the payment. They calculate interest and penalties by the day. So if you're 1 day late, it's not a huge difference. So
Right.
just make your payment. But they did announce that tax season will begin January 27th. All the advisors are preparing. So start organizing your documents. The more organized you are, the less your tax return will cost.
And then usually for our Charles Schwab account holders, that's who we use, our custodian, those tax documents, the 1099s and year-end summaries usually don't come out till February 15th. So I know sometimes we start getting calls around the middle of January, but the reality is we don't have some of this information is not available yet.
And the reason is because there are usually corrections that happen. And so what
Through
Schwab
March.
through March. So what Schwab is actually trying to do is wait a little bit to make sure that there's not a gazillion corrections. And there still are some. And plus you're still, especially with some of the limited partnerships, you don't get that until sometimes end of March,
September.
beginning of April.
What I advise clients is organize your documents, get everything together except those K-1s or 1099s that come late, and provide those. You can organize your charitable donations. You can organize your medical receipts. So all of those donations and other expenses, itemized deductions, your 1098, which is your mortgage interest statement, should be coming out.
I think I just got mine.
I just got mine as well. W-2s. So whatever you do receive, try to get that to your tax advisor as early as possible. And I do know that the IRS is urging taxpayers to file as early as possible to avoid identity theft, but you can also apply for an IP PIN, which is, I believe, identity protection PIN, which they have available. And that just gives you an add. It's kind of the multi-factor authentication for tax returns. So they're definitely recommending doing that or filing early in the season.
So basically what you're telling us is that January 26th is the last day for this year that you'll look well rested until probably June.
October
15th, October 16th, the day after.
Yeah, exactly. But the big talk in the tax community, and we've brought this up before, is the Tax Cuts and Jobs Act, which will be expiring at the end of 2025. And so
Unless they're renewed.
unless it's extended
Right.
and or made permanent. So we'll see what they come up with.
And we'll see also about Social Security, because I know there was talks that potentially not being taxed, but that we haven't seen anything yet get
that
approved.
is
That's just
definitely
the
one
talk of the town.
That's one of the breaks that they've talked about was on the campaign trail was eliminating taxes on tips, eliminating taxes on overtime pay, and on Social Security benefits. So we shall see.
Well, and that would affect an awful lot of people. So
That's why I keep saying that, we'll see what happens in the first 3 or 4 months of this new administration and what comes out.
Yeah, one of the other things they talked about was making car loan interest deductible.
Yes,
which
I did see that.
Interesting.
I thought that was
Okay.
interesting.
Wow.
So
Okay.
Help our auto industry.
I think the biggest extender that I would like to see in the Tax Cuts and Jobs Act is the SALT limitation, which is the state and local tax deduction. So previously, if you itemized your deductions, you could deduct all of your taxes, real estate taxes, and if you lived in a state like California where the tax rates are high, you pay a lot in state taxes. So you could deduct all of that until they put a cap of $10,000 on that. So.
Well, I think one of the reasons that they were doing that is they're saying that part of the reason that your taxes are so high is because you get to deduct everything. So it's kind of a circle,
It could make it a little higher, though.
Well, here, that's true. In Southern California and other places, $10,000 is a lot. So maybe what they should do is do some sort of percentage, because certainly houses in San Diego are way more expensive than a house in Kansas. So where I used to live, Pittsburgh, Kansas.
There's a big push. Yeah, you're right. There is a big push for that, and a lot of the talking heads that have come on, both CNBC and other, financial news networks are all talking about lifting the SALT tax from 10,000 to, some number.
Yeah, and
they're
most of
trying
those-
to figure out a number, and they're in big blue states.
Exactly.
The
And most
high
of those
tax
people
states, New Jersey, New York, California, Illinois. Your usual.
Right. That's
It'll be
exactly what I was going to say. Thanks, Vince.
Okay.
fascinating year for taxes.
I have one thing that I'd read today, and I don't know if this is going to happen, but we've talked a lot about this mega backdoor Roth IRA. Mm-hmm. I read something in that Financial Advisor magazine that we get online that I get. I like reading that, I must say. But they were talking about eliminating that. And that was the first time I'd heard that. But, and again, I don't know, but this woman who is a tax expert with the government was saying that there is a good chance that they may be eliminated in the new.
You know what? I have an even better idea. Why don't we eliminate tax on all of those savings accounts? If you really want to incent people, just say they're tax-free, period.
Yeah, I agree.
And then we don't have to worry so much about Social Security.
Again, like I said, I just saw that, and I know we've talked a lot about it, and I don't know if my tax expert has seen that yet. Have you seen that?
I've heard all sorts of things.
I've heard about Roth conversions going away at one point.
The rumor mill is big time, huh?
And
Okay.
honestly, I've been doing taxes for 25 years, and I wait until they pass the laws because it's already so complex.
All right. Well, I think that's it for this week. We'll see you guys again next week. Thanks again for listening. Take care now. Bye-bye.
Thank you.
Thank you.
Please stay tuned for important regulatory disclosures. WWM Financial is an SEC-registered investment advisor. The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry and how we may be able to assist. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. As always, please remember, investing involves risk and possible loss of principal capital. Tax considerations presented may not be appropriate for every individual circumstance. A tax professional should be consulted before making any decisions about your tax liability.